Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillahi rabbil alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Sallallahu alayhi wa ala alihi wa ashabihi ajma'een. Assalamu alaikum to all of our listeners of Radio Al Ansar, and welcome to another edition of Zidni Ilma. This is Riyaz Day and I will be the host for tonight, insha'Allah. We make dua that Allah subhanahu wa ta'ala increases us in beneficial knowledge. Allahumma anfa'na bima 'allamtana. O Allah, benefit us from that which you have taught us. Wa 'allimna ma yanfa'una, and teach us that which is going to be of benefit to us. Wa zidna ilma, and increase us in beneficial knowledge. On this program, every Wednesday night, we have different ulama, professionals, and the objective is to talk about various topics of deen, to increase our knowledge, our ilm of deen with regards to contemporary issues and other issues. And the objective is for us to then bring this knowledge that we learn about into practice, insha'Allah. Before we commence with tonight's program, we have entered the new Islamic lunar calendar year, and the month of Muharram has begun. The Masnoon dua that Sahaba radiallahu anhum would recite on the advent of a new month or a new year is Allahumma adkhilhu alayna bil amni wal iman. O Allah, cause this month to enter upon us with security and with iman, was salamati wal islam, and with peace, safety, and with Islam, wa ridwanim min ar-Rahman, and the pleasure of Allah subhanahu wa ta'ala, wa jiwarim min ash-shaytan, and protection and distancing ourselves from shaitan. So may Allah subhanahu wa ta'ala make this a beneficial year for us. May Allah subhanahu wa ta'ala make it a year of becoming closer to Him and from us moving further away from the disobedience of Allah subhanahu wa ta'ala. Last week we commenced a discussion on halal investing and some guidelines with regards to Shariah compliant investments for people, average people that are looking to save, to grow their wealth, whether it's 100 rand a month or whether a person has more than that to invest. What are the Sharia compliant investments that a person has? And before we commence the discussion today, an interesting point was made by one of the listeners, and that is that can there be any guidelines on how to actually grow or earn wealth first before we can actually invest that wealth? So Rasulullah sallallahu alaihi wasallam reports in a hadith that there are three things that Allah subhanahu wa ta'ala detests. And this is the hadith of Bukhari. The first is useless talk or being careless in conveying information. Then the second is wasting of wealth. And the third is asking too many questions or useless questions. Now the second one is of interest to us, that is a person that wastes wealth, that destroys wealth. What is the meaning of this? One of the meanings of this, the commentators of hadith explain that a person who does not keep his wealth safely or does not manage it properly in such a way that it goes to waste, then this person also comes within the ambit of this hadith. In addition, anything that results in the destruction of wealth because of the negligence of the owner of that wealth. He puts it in a place where it's not protected and it gets lost, or he leaves it in such a way that the wealth becomes corrupted, or it gets lost, or there's a decline in the value of that wealth, or he gets deceived by somebody else, or he spends it in the disobedience of Allah subhanahu wa ta'ala, or he spends it in extravagance. All of this would be, or he gives this wealth to somebody who he does not do his homework about this person, and this person then goes on to deceive him. All of these come under the ambit of wasting one's wealth, as explained in the commentary of this particular hadith of Bukhari. So it's important for us to ensure that when we embark on any journey to grow our wealth, to save our wealth, we do so in a manner that firstly is compliant with the Sharia. Secondly, we understand the implications and the risks of the investment that we are getting involved in, whether it be the tax implications, whether it be the financial implications, whether it be the risk in general with regards to the loss of that wealth, because this is something that Rasulullah sallallahu alaihi wasallam has advised us with regards to. Then Rasulullah sallallahu alaihi wasallam gives us a prescription of how we can conduct our affairs and our business in such a way that we are able to gain barakah, gain blessings in that wealth, and we can also see an increase in that wealth. There's another hadith that comes in Sahih Muslim, wherein there was a person who heard the clouds. There was a voice in the clouds making an announcement that the clouds should go to water the garden of a particular person. So this man then followed the clouds, and he reached a garden, and he saw that the clouds were above this garden and they were watering this particular garden. So he asked the owner of the garden what was his name, and then he realized that this was the same name of the person that he had heard coming from the cloud. So now he was very curious, and he asked the owner of the garden that what special act do you do that you are so blessed by Allah subhanahu wa ta'ala? What special act that you do that this particular cloud came and an announcement was made that this cloud should come to your field and it should water your field? Meaning that this was the blessings that Allah subhanahu wa ta'ala was sending. Now, today we may not always be engaged in agriculture or in farming, but Allah subhanahu wa ta'ala has the power to send the customers to our businesses. Allah subhanahu wa ta'ala has the ability to send the lucrative deals to us. Allah subhanahu wa ta'ala has the ability to give us a better job than we currently have. Allah subhanahu wa ta'ala has the ability to give us a promotion. Allah subhanahu wa ta'ala has the ability to give us an increase. Now, what was that special act? So this person then responds and he says that whatever I earn, whatever I yield I get from my crop and from this farming, then I split it in three. I give 1/3 of it in charity. My family and I eat and we live off 1/3, and 1/3 I reinvest back into my business. So this person was taking his return, he was splitting it in three, he was giving 33% in charity, he was giving 33% back into the business to grow the business, and 33% he was giving or using for his own needs. Now, of course, each person can assess his own situation. It may not always be possible for a person on whatever he's earning to give 33% of that out in charity. Although Allah subhanahu wa ta'ala has made it very clear that whatever is spent in the path of Allah subhanahu wa ta'ala, Allah subhanahu wa ta'ala will replace it manyfold. The ayat of the Quran, مَثَلُ الَّذِينَ يُنْفِقُونَ أَمْوَالَهُمْ فِي سَبِيلِ اللَّهِ, the example of those who spend their wealth in the path of Allah subhanahu wa ta'ala is like the example of a sheaf of corn. And Allah subhanahu wa ta'ala then goes to explain that that 1 rand or that $1 that is spent in the path of Allah subhanahu wa ta'ala, the minimum return that a person will get would be 700-fold. And Allah subhanahu wa ta'ala mentions, وَاللَّهُ يُضَاعِفُ لِمَنْ يَشَاءُ. Allah subhanahu wa ta'ala can multiply and does multiply as He sees fit, and it could be way more than that. So we should always set aside a certain amount of our earnings. Hazrat Mufti Shafi Sahib rahimahullah, the author of the famous tafsir of Quran, Ma'riful Quran, he mentions that it was his practice, and his son Mufti Taqi Usmani also narrates this in many different incidents, that it was his practice that whatever he earned, he would immediately set aside. If it was from earnings, then he would set aside 10% of that and put it in a separate location as part of sadaqah. And if it was gifts that he would receive, then he would set aside 20% of that and he would then give that in sadaqah. So the moment the money came in, automatically he kept it aside, he kept a certain amount aside, and he would give this and made this his ma'amul, his practice. So one way of us increasing this barakah in our earnings, no matter how much or how little we are earning, if we keep aside a certain amount, and nowadays it's so easy, a person can put an automatic debit order to a particular charity of their choice, or whoever it is that they're giving these funds to. Automatically from their salary, a person can do that. Or if a person has a business, then he can keep a certain amount aside, keep a record of it, and then when he gets a chance, he distributes it. So this is an important aspect of how we can, each person, whether you are starting out in your earnings and you're just getting some pocket money as a student, or whether you have your first job, whether it is a person that is in the peak of the earnings, a person who's a retiree as well. Even a retiree has the ability to benefit from this beautiful advices of Rasulullah sallallahu alaihi wasallam. So this was just an introduction to how we can increase the blessings in our wealth, and also the importance of making sure that we choose our investments wisely, that we ensure that we do our due diligence. Unfortunately, in our community particularly, we have this notion of people wanting to get rich quick, and people that are looking for investments that give us the highest returns, and sometimes investments that outwardly don't offer any risk. Now, this is contrary to the principles of Sharia. A person has to take a certain amount of risk in order to get a return. One of the usuls, one of the principles of Islamic finance and commerce is that if a person does not take a risk in a particular venture, then he's not entitled to get any return from that venture. If a person puts money into something and he does not absorb any of the risk, but at the same time he's obtaining some return, then that would be tantamount to riba and interest. So we should also do our due diligence on wherever we are putting our funds in, and make sure that those investments have got certain governance processes in place that are going to protect us, going to protect the wealth that we are investing in. And it's also not something that we're just investing for ourselves, but inshallah this will be something that will be a legacy for our children. So it's important that we ensure that the correct protective measures are in place. Now, in last week's discussion, we spoke about some basic investment strategies that a person could engage in. One of them was to keep his money in a bank account wherein he was able to earn some sort of a Sharia compliant return, and we looked at the zakat and the tax and the income tax and return implications of that. The second was investment in property, and how are we able to finance that property in a Sharia compliant way, and what would be the tax implications, what would be the zakat implications of that compared to investing or keeping our money in a bank. And then we also touched or began looking at investments on shares in the stock exchange. Now, these are investment options that are easily accessible to average people. A person can open a bank account, a Sharia compliant bank account. A person, if he wishes to purchase a property and he has the ability and the finance to purchase that property, then it's accessible to the average man on the street. If a person wants to engage in trading on the stock exchange, nowadays it's become actually very easy. You can open up many platforms, free platforms as well, that are available locally and abroad, that allow a person to invest in on the stock exchange directly without the medium of a broker or a financial advisor. So if a person is doing that, then on the one hand, you've got to make sure that you have the financial acumen to be able to read the markets and to understand the movement in the share prices of the shares that you're looking to invest in. And then more important than that is to make sure that you are able to ascertain which of those shares are Sharia compliant. And we discussed some of the Sharia compliance screening ratios that a person would have to look at before investing in a share. Now, if a person doesn't have that ability to read those financial statements and that financial information, or alternately to be able to identify what is Sharia compliant from a Sharia perspective, and then also be able to purify any impermissible income that may be earned in that portfolio, then the person has an option of investing in a Sharia compliant unit trust. And the advantage of that, of course, is that there is a fund manager that assesses what investments are good and what investments are bad, and he or she has a mandate to ensure that they will target a certain return. Of course, they cannot guarantee the return, but they will target a certain return, and they will benchmark that return against other investment opportunities. And then in addition to that particular fund, of course, one would have to search for a Sharia compliant fund, and there are many that are available nowadays. Should have a credible Sharia board that is attached to that fund that makes the Sharia investment decisions on whether particular investments and particular shares can be included in that fund based on their Sharia compliance, and then more importantly, being able to identify the impermissible income that is there and then distribute that out to charity. So the advantage of a unit trust, although the returns often may not be as high as if a person exposes themselves directly to a particular share, but a person will then have the advantage of someone managing that fund for them. So we discussed in detail those aspects, and today we'll begin with the discussion of retirement investments. So typically in South Africa, you have either a retirement annuity or you have what we'd call a pension or provident fund. Now, the underlying investment is very similar. The regulation behind them from a legal perspective is very similar. And the tax implications as well as the zakat implications are also very similar. The difference between a retirement annuity and a pension or provident fund, and for all intents and purposes, pension and provident funds nowadays are pretty much the same. Historically, there was a difference between a pension and a provident fund, particularly in terms of what could be done when one was retiring. But the regulations have changed, and for all intents and purposes, they are pretty similar. So your pension or provident fund is when you are employed by a company and somebody, the employer of that, your employer is then investing those funds on your behalf in a managed fund, whereas a retirement annuity is also a retirement investment, but this is done voluntarily. So somebody that is investing outside of their employer's jurisdiction, or somebody that is investing privately if they're a sole proprietor, or somebody that has their own business and wishes to take advantage of the tax benefits of a retirement fund, they would then purchase a retirement annuity. Now, nowadays we do have Shariah compliant funds that are meeting the criteria of the Regulation 28 requirements, and so a person can invest in a Shariah compliant pension provident fund or a retirement annuity. And if it's with one's employer, then one would need to engage with them. And most of the big funds that are in operation nowadays all have some sort of Sharia compliant portfolio, which operates very similar to the unit trusts that we discussed a little bit earlier. Now, what are the tax implications? The tax implications would be that a person gets a deduction when making that investment. So annually a person gets a deduction, and that deduction is capped at either 27.5% of their taxable income or a maximum of 350,000 Rand. So if you invest in there, you get a deduction in that particular year on your taxable income. So it's quite lucrative from a current tax perspective. The requirement then is that the funds need to then remain in there until you retire. Now, that would be the earliest at 55 years of age. If you withdraw earlier than that, then there would be higher tax consequences. So the idea behind this is that government wants to encourage people to save for retirement, and the tax deductions are given as a result of that. On retirement, you're able to take out 1/3 of that investment as a lump sum in cash without any tax consequences, and the balance of the 2/3 would then need to be used to purchase an annuity. And you would obviously, whatever income you get from that annuity on a monthly basis, you will be taxed on that based on your marginal tax rate at that particular point in time. And now we move on to the zakat implications of retirement investments. Now, there's two types of investments that a person might have from a zakat perspective. One is an involuntary retirement investment, and the other is a voluntary retirement investment. An involuntary retirement investment is where it's a mandatory condition of employment that a person has to invest in a pension or provident fund. The employer deducts that at source and contributes it directly to the fund without it coming into the ownership directly of the employee. Now, in that case, the ulama have mentioned that there would be no zakat on that, the value of that fund, as long as a person is employed by that particular employer, because those deductions were done at source and they went directly into the fund, and it's an involuntary fund, meaning that a person has to compulsorily be part of that fund as a condition of their employment. However, if a person now moves from one company to the other or leaves that company, the law is that the pension fund that they've invested in, they now have the option to access it, and they're able to move that into what we call a preservation fund. But the difference is that they do have the option, although there would be tax consequences if they did that, but they have the option to access it. And now that they have the option to access it, going forward, this now becomes zakatable, meaning that they have to pay zakat on the underlying value, the market value of that fund on their particular zakat date. And the same would apply to a voluntary fund, which is a retirement annuity. If a person invests in a retirement annuity voluntarily to take advantage of the tax deductions, then it would be compulsory for a person to include the value of that fund in their zakat calculation on an annual date. So this is an important one, and very often people invest in different types of investments. Sometimes they retirement investments, sometimes they general funds, and they make two mistakes. Number one, they don't ensure that they've invested in Sharia compliant funds. And ulama and ulama bodies nowadays are dealing with many cases of people who have passed away, and they have large investments that they're sitting with in these funds, and the heirs are now sitting with a position whereby they've got funds that have been invested in non-Sharia compliant investments, and they need to figure out how they can deal with it. Obviously, they're not able to keep all of that because there's an impermissible aspect there, so that needs to be given away in charity, and some calculations, etc., need to be done. So it's important that if you're starting out, you make sure that your investments are Sharia compliant. And the second mistake that many people make is that they forget to include these investments in their zakatable assets on an annual basis, and zakat is then not paid on this on an annual basis. So very importantly, ensure that the funds, nowadays with the access that we have to these funds, you can go onto the internet, choose a fund and contact them directly and open up an account and contribute into that fund directly without any intermediary. This wasn't the case, 15, 20 years ago, where a person had to have a broker or a financial advisor to assist them in doing that. So people do this, and often they do it, but they don't actually get the right Sharia advice to make sure that it's Sharia compliant, and then they also forget to include that in their zakatable assets at the end of the year. So very importantly, to ensure that if we have these retirement investments, and they can be quite attractive from a tax benefit perspective, they can be quite attractive, but we need to make sure that we understand the Sharia compliance aspects of these investments. So the next category of investment that we'll be discussing here is the investments in foreign exchange. Now, many of us at some point have had the opportunity of traveling overseas, and so we've had to purchase foreign exchange. When we go for Umrah, a person will purchase riyals and dollars and any other part of the world. And nowadays, it's actually possible for someone to engage in many different types of foreign exchange transactions. If you open a global account on your banking profile, you're able to buy foreign exchange up to a certain amount based on the Reserve Bank allowance. You're also able to invest and get involved in many forex trading platforms on the internet. Now, what is permissible? What is not permissible? How do we make this Sharia compliant? What aspect is Sharia compliant? So, in order to understand this, we have to understand from a Sharia perspective the concept of bay'u sarf, exchange transactions, commercial transactions that involve an exchange. Now, this is a very broad area, and it's one of the areas where Rasulullah sallallahu alaihi wasallam in the ahadith has indicated that if it is not done correctly, it will result in interest being earned or paid. So Rasulullah sallallahu alaihi wasallam mentions certain commodities like gold and silver, and those are the two most common ones. There are others that are mentioned there, barley, wheat, etc. But the most common ones that we engage in nowadays, gold and silver, Rasulullah sallallahu alaihi wasallam has mentioned that if you are exchanging two of the same commodity, gold for gold, then it's important to understand that you have to have the same weight of both on either side. You cannot exchange 100 grams of gold for 120 grams of gold. So that's the first thing. That 20 grams difference, that would be interest. So if you go, for example, to the jeweler and you have a piece of jewelry and you would like to exchange it for something else, and so before going into foreign exchange, we're now actually just discussing the investment in gold, which is also a very important investment area. But if you have this jewelry and you want to exchange it for something else, you cannot simply say that I'm going to give this to you, this piece of jewelry. Let's say it's a bangle, for example. Here's this bangle, and I'd like the chain in exchange for that. What would have to be done is you would have to understand the weight of the gold in the bangle, and you'd have to understand the weight of the gold in the chain. If both of them are the same, for example, both are 100 grams, then of course you can exchange it. But if there's a difference in the weight in the gold, which in almost all the cases you will find that is the situation, then you cannot do this exchange directly. Rasulullah SAW has mentioned that you have to have equal weights when it comes to the same type of transaction in gold and silver. That's the first thing. And the second thing that Rasulullah SAW mentioned is that this transaction has to be done on a spot basis, meaning that a person can't say that I'm going to give you this bangle today and you can give me the chain in a week's time. Both need to be exchanged on a spot basis, meaning immediately. And you'll understand in a little while how this is relevant to the foreign exchange side of things. But this is very important, and particularly for the females in the community that often exchange their gold, it's important that this sequence of events is done correctly. So how do we make this Sharia compliant? If we are exchanging jewelry, we would go to the jeweler, we have the bangle, we'd have a separate sale of the bangle to the jeweler, and then using the money that the jeweler pays to us for that bangle, we will then purchase the chain that we're looking to purchase. So again, if a person is exchanging gold for gold, both sides need to be the same in terms of weight, and the transaction has to be on spot. Now, often if you go to Makkah Mukarramah and Medina Munawwara and you want to change your gold, you'll find that many of the jewelry stores there, they will follow this and they will not allow a direct exchange of one piece of jewelry for the other because of this particular hadith of Rasulullah sallallahu alaihi wasallam. Now, in contemporary times, ulama have built on this particular hadith and they have looked at the different implications. So when it comes to foreign currency transactions, the principle is that, and the principles that we've just discussed in sarf are used in foreign currency transactions to a certain degree. There's of course a difference of opinion as to whether foreign currency transactions falls completely within the ambit of sarf. But to simplify it, investing in foreign currency or engaging in foreign currency transactions is permissible. There's no issue with that. However, there are a few things that we need to bear in mind. Number one is that if we are exchanging a currency and we are going to settle both sides immediately. So I'm purchasing $100 and I'm giving 2,000 rands for the $100. I'm paying over the 2,000 rands to the counterparty and I'm receiving the $100 immediately. That means both sides are settled in cash. Then we can agree on any rate, mutually agreeable between the two of us. So if the market rate is 20 rands, for example, we can agree on a rate of 15 rands, of 17 rands, of 18 rands. Both sides are being settled in cash. If, however, one side is going to be settled at a later basis, so for example, I'll give you the dollars today, but you give me the rands in a week's time, if that is going to be the case, then in that instance, ulama have mentioned that you have to use the spot rate on the date of the transaction. You have to use the spot rate on the date of the transaction. And then the third option, if we conclude this sale of foreign currency, but neither party delivers in cash and both are going to deliver on a deferred basis, so I'll give you the dollars in a week and you can give me the rands in 2 weeks, that transaction is not permissible from a Sharia perspective. It is bay'ul kali bil kali. This is specifically not not allowed, where the both sides of the transaction are actually going to be on a deferred basis. So the first two would be allowed, the third would not be allowed when it comes to a foreign currency or foreign exchange transaction. So this is the basic form of foreign exchange that a person might have. Now, building on from this, you have many other types of forex trading, or what we call FX trading. And there's different platforms that you will find on the internet that allow you to engage in forex trading. Most of those, if not all of them, would not be Sharia compliant. Here you would have, for example, CFDs, you would have, which we call consequences of contracts for differences. You would have futures transactions. You would have options that are being purchased and traded. And in almost all of these situations, the foreign currency itself never gets delivered. Rather, what happens is that you settle on a net basis. So as a result of that, these transactions would not be permissible. They are not permissible for a couple of reasons. Number one, there's gharar, there's excessive uncertainty that's involved in this transaction, where you don't actually engage in any meaningful underlying transaction, but rather you simply settle them on a net basis. There's qimar, there's gambling that's involved here, because one party is going to definitely win and the other party is going to definitely lose because of the way the transaction is being carried out. And then one of the biggest challenges that you have is that there's no actual underlying mabi' or commodity that is being traded. What happens is that a person will simply settle the difference on the foreign exchange transaction, and there's no transfer of foreign exchange from one side to the other. Now, many of us, because we are online and we're looking at different platforms and portfolios, we get involved in these types of transactions which are not Sharia compliant. So it's very important that if we are looking at these types of vehicles or investments, that we make sure that we understand the Sharia implications, particularly when it comes to these foreign exchange transactions. So the only type of foreign exchange, the general type of foreign exchange transaction that is permissible is where a person is buying foreign currency, and the intent is for one person to deliver rands and for the other person to deliver dollars, for example. In that case, it would be permissible. Now, of course, foreign currency and exposure to foreign currency in its own form is something that is a good investment strategy. So it would be something that someone should be considering, especially in terms of the way the foreign currency in South Africa is moving over a period of time. Monies that have been moved into foreign currency have appreciated in dollar terms. For example, if we look at the last 10 or 15 years, the rand has depreciated, and somebody who invested 100,000 rands into dollars 20 years ago, the value of that is, if he had to invest 100,000 rands today, is going to be a lot less in dollar or foreign exchange currency terms. So it's important that a person understands these requirements of the Sharia when it comes to foreign exchange transactions. Just to repeat, that if both sides are going to be settling immediately, then a mutually agreeable rate can be used. And if one person is not going to be settling immediately, then we should use the spot rate. And of course, if both parties are not settling, then that transaction would not be permissible. I just want to conclude today's discussion with a little bit of a discussion around currency. We were talking about foreign exchange and foreign currency, and just understanding the history of currency from a Sharia perspective, from an Islamic perspective. And what we need to understand, that in the time of Rasulullah sallallahu alaihi wasallam, generally currency was based on dinars and dirhams, on actual gold, on measures or weights of gold. And money as we know it today as a currency was not generally in vogue at that point in time. But of course, as time moved on, we then had the introduction of paper currency, which initially was backed by gold, going back to the fractional reserve system. And then at a point in time, that was detached, and the paper currency no longer was represented by an underlying value or store of gold. So today what we have, and the currency that we have, the question is, what do we, or how do we classify the currency? There was a view, and it's not the dominant view, that the currency still is within the ambit of gold and silver, and so we would then include the rules of gold and silver when we're exchanging currency. But there's another view, which is generally the more dominant view, is that because of that delineation or that detachment from the underlying value of gold to currency, we would not include today's paper currency, the rands and dollars, in the complete ambit of gold and silver transactions. There are still some restrictions. So, for example, if you had to give a person a 10 rand note, you would only be able to receive back in the same currency 10 rands. So whether it be in 1 rand coins or 2 5 rand coins, you wouldn't be able to receive 11 rand or 20 rand back for the exchange of 10 rand, because that would be an unequal exchange. However, the rules with regards to exchanging two different currencies would not necessarily be the same as the exchange of gold for gold or silver for silver. So this concludes our discussion with regards to some of the investments. We spoke about investments in cash management accounts or bank accounts, and when a person structures their portfolio, it's always important to keep a certain amount readily available or quickly accessible in cash, because often when there's an emergency or a person requires funds, you need it from cash reserves rather than it being tied up, for example, in a property investment. So a certain portion of one's portfolio should be kept in there, but at the same time we should find Sharia compliant alternatives to be able to secure those funds. Then we have property investments. A person can engage in property transactions. One aspect of property transactions that I want to mention here that we didn't discuss last week is that when you buy a property in South Africa, you'll often have a deposit that you will pay into your attorney's trust account, and that sits with the attorney until the transfer takes place. Now, from a legal perspective, those are your funds, and the attorney is mandated to put those funds in an interest-bearing account and to give you the interest that you've earned during that period once the transfer goes through. Now, if that is put into a conventional account, of course, that interest needs to be given out in charity. It's impermissible income. Some attorneys do have options, and you should ask, if you're engaging in a property transaction, for a Sharia compliant attorney's trust account. In that case, the funds would be invested from a Sharia compliant perspective, and you would be able to retain the profit that's earned. So we spoke about property investments and how to finance those property investments and the different ways to finance them, whether it be through a Sharia compliant financial institution or if a person is looking to do it on a private basis. The advantage of property was the fact that from a Zakat efficiency perspective, the Zakat value on an annual basis would be lower than, for example, investing your money in cash or putting it into the stock exchange. We then looked at investments in shares and either investing directly in shares or investing through a unit trust. Very importantly, there's the Sharia screening criteria that we should bear in mind. Firstly, the underlying activities of the business that we're investing in would have to be Sharia compliant. So, for example, you wouldn't be able to invest in AB InBev or what was previously known as SA Breweries because it's a brewery. You wouldn't be able to invest in some financial institutions like Standard Bank and ABSA because of the underlying transactions. So you need to make sure that the underlying business is Sharia compliant, and then there are some quantitative criteria which we discussed that need to be applied to identify whether that investment is permissible. And on top of that, one would have to ascertain that is there any impermissible income, a small amount, less than 5%, that is earned that would have to be given away in charity. And we also spoke about unit trusts. We spoke about retirement annuities and retirement investments and looking at the Zakat implications as well as the tax advantages of that. And then finally, we looked at investments in gold as well as investments in foreign exchange and foreign currency transactions, and particularly looking at the Sharia compliance of foreign exchange transactions. And in most cases, the FX platforms that are out there, you would find are not Sharia compliant. The way that they're structured, they are not Sharia compliant. So we make dua that Allah subhanahu wa ta'ala gives us the correct understanding. We make dua that Allah subhanahu wa ta'ala gives us the tawfiq to invest our money wisely. We spoke at the beginning today about a hadith of Rasulullah sallallahu alaihi wasallam, and we'll conclude with the repetition of that hadith, that one of the categories that Allah subhanahu wa ta'ala has mentioned with regards to a person there's destruction on that person is that person that does not look after his wealth, or that person who wastes his wealth. Allah subhanahu wa ta'ala detests three types of people: one who engages in vain or useless talk, one who wastes his wealth, and one who asks unnecessary questions. May Allah subhanahu wa ta'ala accept from us. May Allah subhanahu wa ta'ala give us the correct understanding. Wa akhiru da'wana anil hamdulillahi rabbil alameen. Alhamdulillahi rabbil alameen. Alhamdulillahi rabbil alameen. Alhamdulillahi rabbil alameen. Alhamdulillahi rabbil